easyJet shares jumped 10% on Monday to 616p, their highest level in 4 years, after the airline agreed in principle to a $5.5 billion takeover from U.S. investment firm Castlelake. The board said the £6.90 per share proposal was at a value it would be minded to recommend to shareholders. That endorsement is notable. It is the first time in 5 attempts that the board has said yes. And yet the stock sits at 616p, not 690p. That 11% discount is not routine arbitrage noise. It is the market's direct verdict on whether this deal closes. The bid structure itself explains part of the caution. Castlelake, a Minneapolis-based private credit firm managing $37 billion in assets, is not a strategic airline buyer. It has experience in aircraft leasing. It previously held a stake in Scandinavian carrier SAS. But it is not the kind of acquirer that walks into easyJet with a ready-made operational plan. The 5th bid emerged after 4 were rejected. The airline called the earlier approaches highly opportunistic, citing depressed valuations caused by the Iran war's fuel price impact on the sector. Fuel costs have spiraled, bookings fell in the spring, and easyJet shares were down roughly 30% in the year before Castlelake's interest became public. The £6.90 figure is a 24% premium to last Friday's close. Meaningful, but still a deep discount to the share prices of the late 2010s, when easyJet traded comfortably above £17. The board's acceptance of a price it once called on the cheap signals that the standalone recovery path has its own limits. The bottleneck sitting between 616p and 690p is not price. The board has agreed the price. The bottleneck is structure, specifically whether a U.S. firm can legally own a European airline at all.
Every airline operating routes within the European Union must be majority-owned and effectively controlled by EU nationals. easyJet flies to 38 countries across Europe. Castlelake is American. That combination is on its face legally incompatible. Castlelake's proposed solution is a holding structure in which it retains 49% and 2 Irish aviation executives, Peter Bellew, a former easyJet chief operating officer, and Mark Breen, head of Dublin-based Amneris Aerospace, hold the controlling 51%. On paper, EU control sits with the Irish partners. In practice, JPMorgan analysts raised a pointed question. There is still no public information on how the partner stake is funded, what economic interests those partners actually hold, and whether regulators will treat the structure as genuine EU control or a legal workaround. That is the buried assumption the market refuses to accept at face value. The board's endorsement implicitly treats the ownership structure as solvable. Castlelake committed to a best endeavors undertaking on regulatory clearances. But best endeavors is not certainty. Airline analyst John Strickland told Reuters the EU ownership and control elements were complex and that it is not yet fully clear how this will be addressed. An unnamed institutional investor said plainly that the current share price reflected the market pricing in a probability of deal failure of more than 30%. Those are not the same as saying the deal falls. They are saying the resolution is not yet in the articles. The second unresolved variable is Stelios Hagianou. The easyJet founder holds more than 15% of the airline through his family, a stake worth close to £800 million at the offer price. He has been outspoken about easyJet's direction since stepping down from the board in 2010. He declined to comment on Monday. Some investors had reportedly been pushing for a price above £7 per share. The board settled for £6.9. Whether Hagianou backs the deal, holds out for more, or opposes it entirely is the single shareholder approval variable that JPMorgan specifically flagged, alongside the possibility of a counterbid from a strategic buyer, naming Lufthansa has the most complementary network fit, with Wizz Air as a balance sheet constrained alternative. The market is not saying the deal fails. It is saying these two variables, EU ownership structure and founder approval, are unpriced at 616p.
Castlelake has until 5 p.m. on August 3rd to submit a firm offer or walk away under UK takeover panel rules. That is the hard deadline. Between now and then, 2 things must happen for the 616 to 690p gap to close. The ownership structure must be made legible to regulators and investors, and Hagianou must signal his position. Neither has occurred as of Monday's session. The forward verification is not the offer price itself. The board already agreed that. It is the structural and governance clarity that converts board endorsement into a firm bid. For a holder of easyJet, the 11% spread looks attractive in isolation. Aviation analyst James Halstead described the offer as a fair price, assuming easyJet hits its medium-term target of over £1 billion in annual pre-tax profits. The airline's package holidays arm has been its fastest-growing segment, and a modern Airbus fleet gives it a longer-term cost edge over legacy competitors. But Beauchamp at IG put the countercase directly. The deal still represents a deep discount to the share price of the late 2010s. A holder who takes £6.90 is locking in a recovery that never reached its pre-pandemic level. The relevant question for a holder is not whether £6.90 is fair versus today's price. It is whether the deal collapses and easyJet retreats toward the £5.58 at which it closed last Friday if Castlelake walks away on August 3rd. For a watcher considering entry, the opportunity map is asymmetric but not one-sided. If the ownership structure is confirmed and Haji Ionanu endorses the bid, the stock converges toward 690p. If either fails, the spread unwinds sharply and easyJet likely reprices below 600p as deal premium evaporates. The discriminating signal is not the August 3rd date itself. It is the earlier leading variable, Haji Ionanu's first public comment on the £6.90 offer. His silence on Monday moved no capital. His voice will. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.